Welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to take your stock-related questions tonight are Thamsanqa Netha from Shiloh Capital and Sanelisiwe Tofile from All Weather Capital. Be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Thank you so much for your time, gents. I'm actually going to go straight into company news, and actually before I get to the questions, ask you about Kumba Iron Ore because as much as we did see a drop in their financial metrics, not quite a lot of reaction on the Kumba share price. And I'm wondering if, this is priced in or if it's better than what markets had anticipated. Sanelisiwe, what do you make of it?
Yeah, so I mean, obviously Kumba will track for the most part the kind of underlying commodity price, the iron ore price. So when that moves down, Kumba will move down, and you've seen some weakness in the price of late. So that would impact. But I think with today's result, I think the main thing that kind of probably supported the share price, despite, as you say, some of the weaker parts of the weaker metrics that you saw in the result, is that the cash flow was quite nicely managed. I mean, a bit of well-managed inventory levels there. And then they increased the dividend. I mean, and I think it is something that they could play around with quite a bit. I think the payout ratio was, I stand correctly, about 80% of earnings this time around. So they did increase the dividend in these results. I think maybe that's what encouraged the market on Kumba today.
Tammy, is maybe the market also less worried about the impact of Transnet, at least in the short term, considering what Kumba has done to kind of match, the shortcomings of Transnet?
Yeah, I think that's a major part of it. The private investment in assisting Transnet, making sure they're able to solve the real challenges, is a key element. I think the second element is the review or the long or medium to long term of iron ore prices. I think it's important how they manage that. I think as a business, cash flow is good, and they are well operated and are still an Anglo company. So I think it's given all those factors, it may not have shot the lights out, but definitely will maintain some almost stable future.
Sanelisiwe, what would you maybe more nervous about right now between iron ore and coal? There is a question on Thungela and the prospects for at least the next 6 months. A similar question was asked, I think, a few weeks ago, if somebody would choose Exxaro or Thungela. And I remember that someone was actually quite nervous about Exxaro because of the fact that it is mostly exposed to iron ore. Is there one that you'd be most nervous about at this point, or just completely stay away from both of them?
So I think, I mean, both are quite sort of industrial type commodities geared to the global growth levels of sort of economic activity globally. I mean, all three of the companies we talked about, Kumba, Thungela and Exxaro, do have some sort of export component. So they do depend on sort of global economic activity. With regards to iron ore, obviously there's a meaningful sort of gearing to China. As you know, in the past sort of 15 to 20 years, there's been a big infrastructure sort of drive out of China. So that's soaked up a lot of the iron ore globally. China is now going through a bit of I'll call it a stabilization in some of the economic activity. So perhaps the demand is tapering off, or there's worries that demand is tapering off. Whereas if you look at coal, I mean, energy is energy. There's energy needs across the world. There was a period where ESG might have taken over and caused a kind of subdued demand for coal. But I think the reality is that, the demand for a sort of even baseline type of energy that coal can provide across some of the global economies is quite important. So if you ask me, I think I'm probably leaning towards coal. And I mean, there's a bit of a relationship that's kind of broken down a bit now, where the Northern Hemisphere winter was a big energy demand driver in terms of these commodities. But now what you're seeing is big heat waves, like massive heat waves across Europe, across the US, across the Northern Hemisphere, which have actually now caused an increase, or potentially could cause an increase in demand for coal in the summer periods for cooling purposes. So I think coal's probably got more kind of fundamental support from the way I see it right now.
Okay, well, the specific question on Thungela, what's the short-term outlook for Thungela Resources in the next 6 months? Are we going to see some good gains or not? Or should we hold? Tammy, Sanelisiwe seems more optimistic on coal. If you are already in Thungela, would you hold on, hoping for good prospects or maybe better prospects in the coming 6 months?
I'll definitely hold. I think the view of coal in our part of the world is going to be very big. There's going to be significant demand as they get more and more power stations online and as the energy demands in the country increase. I think we can't ignore a resource that we have 100-odd years of in supply. Regardless of the move towards ESG and greener technology, we still have a very cheap resource that is able to produce significant electricity, energy in general. So I think it's important to look at it that way. I don't know if you'll get the kind of rises you had when Thungela initially listed, but I think they have a great set of assets and they are able to supply the energy market with those assets, and additionally also export to countries like India. So I think the scope for coal is quite good. The scope for Thungela is quite good. They're a proven operator. I think July and his team are able to produce great results and are able to supply the market efficiently.
All right. Well, there was a question here while we are still on commodities. Why has the bottom fell out of Global Miners X Copper ETF? Is this one that you look at, Sanelisiwe?
Well, I mean, that's a very broad question. It kind of will depend on which sort of companies or commodities you look at. And I mean, from my perspective, I think one of the main things to probably consider is, the copper comment coming out of the question is that obviously there's been quite a meaningful demand in recent history for copper, which would explain why it's held up relative to other commodities. Obviously, the green energy drive, renewable energy, and EVs and the like, and all these other kind of products have all kind of increased demand for copper, lithium, and all these kind of commodities. So I think that's where you're seeing the support for that commodity in particular and those kinds of commodities. Whereas some of the other ones might just kind of be going through the motions, kind of cyclical motions with the global economy. And then, I don't know necessarily if global gold names have fallen off, but certainly our local names and the gold price has been seeing quite a lot of support. As you know, it's a safe haven. Geopolitics has not been short in the current year. So I think that's also been kind of well supported.
Tammy, would you be going for a copper ETF at this point? Because there obviously still quite a lot of optimism on copper's prospects. Would you be going for a copper ETF or going for a miner with exposure to copper?
I'll always opt for the miner. The ETF sort of can bundle a group of miners together, and you're not sure if they are all able to perform. I think the overarching view is that as copper is called Dr. Copper or Mr. Copper because it has the view to follow the economy where it's going and the view of the future. I think there's a lot of the elements of copper or the elements around copper that have been overstated. The fundamentals of the material and the inputs of the products, I think, have been overstated. So ETF may not perform as well over time, but the commodity itself may. So I think the dynamics there are very different. Buying a miner, you're in essence buying an operator, someone who can dig stuff out the ground and sell it at a profit. Whereas if you buy the commodity itself, you're just purely looking at, can this commodity deliver value? So I think copper miners versus copper itself, there'll always be those nuanced differences. And I would sooner actually buy into a miner with exposure to copper who've proven to be able to profitably mine, rather than a group of miners who I don't necessarily have knowledge of the ability to do it.
Well, the resource counters are definitely taking over the first half of this show today. Sasol, time to buy Sasol. Sanelisiwe, and we have actually seen quite positive movements, I guess, over the last few days, last maybe 2 weeks on Sasol.
Yeah, definitely. I think Sasol has suffered I mean, on top of suffering the kind of cyclical nature of commodity prices, commodity demand, and the like, it suffered its own sort of internal operational problems, problems with the balance sheet, and all those type of things that have kind of dissuaded investors from coming in. But I think what you saw from the production update is that at least this time, I suppose they've met guidance across, their products. I mean, some of the products, some of the outcomes were sort of in the bottom end of the range of the guidance, but at least it was kind of meeting the guidance. And I think now looking forward to the result, which I think will come out sometime next month, focus will still be on the balance sheet and how they can kind of either sort that out through cash flow or maybe perhaps some kind of a disposal or something of the like. But I think the encouraging thing is that at least from a production point of view, things have seemed to stabilize. No sort of once-off or unforeseen issues that were material in the period. So I think investors in the past few days were encouraged by that.
Tommy, do you think that we've seen a bottoming out of the kind of negative shocks on Sasol and also maybe sentiment in a stock that some a few months ago called uninvestable?
Yeah, look, I think the challenges around the chemical business, if they can resolve that, they'll have done well. I think there's positive trends in Mozambique with the gas production. There's also, I think, positive trends around their production sales metrics and how they perform there. I think they also, the Secunda operations are also seeming to come right. So I think they're starting to turn the corner. I think looking ahead, it will really come down to how they manage the chemical side of their business and overcome the challenges regarding how much capital is required to correct. Credit to them that they've done a lot of restructuring over the past couple of years to make sure they clean up their affairs. So I think overall, they're starting to turn the corner. There may be some shocks going forward, but overall they do.
All right. Of course, the outage, the IT outage that occurred on Friday, and that was due to an update by CrowdStrike. So there is a question here: is CrowdStrike a buy at these levels? I think it did plunge at some point by 11%. Is it a buy at these levels? Or is it closer to fair value? What should an investor who is already in it do? Hold until the craze is over or sell now to buy later when things are stable? Quite an interesting one. Sell and then buy when things are more stable. What should one do at this point, Tammy?
That's the classic case of trying to catch a falling knife. I think at this point, if you are in, you hold. Technology will always have challenges, especially security technology, because it will always continue to be tested. I think CrowdStrike, it's becoming what you'd call a national asset in the US, given its cybersecurity on cloud platforms. So I think at this point, you hold, updates will happen. There'll always be glitches in technology across the board. But I think what's important is they're a solid company that provides the right kind of security for cloud support. And their business model is still sound. They are a $2 billion revenue business. They're strong. They've got 3,000 or 4,000 employees. So they've got a good business that's holding water. I think at this point, they've faced a glitch, which they'll have to manage. Cybersecurity will always be a concern across the globe. So they will definitely receive some support from peers and the US government, given their importance to cloud computing. So I think if you're a shareholder, hold. If you're looking for the swing trade where you want to buy now and sell where it's a little bit high, you might have to wait for a while before it reaches the right type of prices. So if you're an investor, the thesis to hold some. If you are not and are looking for a quick buck, you might get hurt. So I think if you have a view on cybersecurity and think it's going to go well over the long term, then this is a great time to buy. But if you don't hold that view and are looking for a trade, you might be able to swing it in and out, but you're fighting against very big money on such trades.
All right. Well, this leads nicely into a sector that does need a lot of cybersecurity, and that's banking. Can you please ask the guest which banking stock is better between Absa and FirstRand? Would you be looking at this from different metrics, Sanelisiwe?
Yeah. So I mean, look, banks do tend to be generally homogenized, but I mean, with these two counters, I would say it depends on your risk appetite. I'd say Absa definitely cheap. You've got African operations which might come with some problems. You've got potentially instability around management. The CFO recently resigned. Obviously, they've got a new CFO, but I've had big changes in management in the past sort of 3 or 4 years. So question marks around the stability there. But all that being said, the valuation is cheap. It is still a bank, relatively stable business. Might be sort of need to play catch up with the likes of FNB, which is FirstRand. And the other side of the coin is FirstRand, high quality, execute well. It's not so cheap, to be fair, but you do pay for that quality. So it depends on your risk appetite. At this point in time, I think, I personally would go just from a safety point of view with the FirstRand option. I think that if you do run a portfolio, obviously you might actually take both because again, you do want to get the pickup on the ABSA once things rebound.
Tell me, where would your risk appetite fall here between ABSA and FirstRand?
I'd definitely go for the FirstRand route. I think largely because they are way more innovative. They are able to address their consumer needs. I think they have got growth potential. I think Sanelisiwe is right about ABSA's Africa portfolio. The significant risk, how they're managing currencies and loan book risk. And I think over time, the multiple brands of FirstRand, I think, will weather storms further than a single boat with multiple compartments.
Well, sticking to financial services, there is a question here on Quilter. Your view on Quilter in the medium to long term, Sanelisiwe?
I mean, so it's had a decent period now. If you look at the share prices, well, especially in the SA line, I think maybe a little bit of brand strength might have helped with that as well. But the business itself, I mean, it's a business stands to benefit obviously from the changes in the kind of UK retirement industry, a move from more, I guess we can call it kind of defined benefit to more like a advice-led type of industry where Quilter is an advice type of business principally, and they've also got their own kind of platform. So, you've seen them get a bit of flows coming in there. And then the other thing I think that goes in Quilter's favor is the fact that it's probably trading cheaper than the peers in that market as well. That kind of goes in its favor. For a while, there was sort of speculation around maybe it might be a takeout target. I think it still does screen cheap enough to kind of attract some buyers. So I think that kind of stands to support them as well. So I think if you are a long-term investor, if you're a long-term investor, I think equities is a good option. But I think stable companies with good cash flows, unburdened balance sheets and the likes like Quilter, I think will hold you in good stead.
Yeah, I actually see that share price. It has seen quite a good run recently. Tammy, would you think that it's still attractive for somebody who's not in it to nibble?
Definitely. I agree that it has a high potential to be a buyer target, especially if you look at the deal that Investec did with Rathbone. So you can see the sort of scope that exists around UK wealth management services. So I think over the long term, I think they'll become a buyer target for a much bigger house. They run a good business, and having exited out of like old mutual brand, I think they'll continue to try and build going forward on that. The metrics will always be good for UK wealth management sector. They have great numbers and great opportunities. So I think it's a good buy.
All right. Well, a company that hasn't really had great numbers for the last few years, but seeming that their last update was a little bit encouraging, was Nampak. Can you please ask your panel if they know why the Nampak share price has been increasing so rapidly in the last 2 weeks? I'm currently in profit and pondering whether to sell because I prefer not holding this share any longer. Let's actually start off with the first part of that, why it's been increasing rapidly in the last 2 weeks. Does it have anything to do with the last numbers that they took out? Sanelisiwe, I'm not sure if this is one that you look at.
Yeah, I mean, look, it's kind of fallen out of interest, both because of the problems it has and also because share price has kind of come off to become basically a penny stock at some level. But I mean, I think the answer also lies within the question. I mean, they released an update, I think, about a month ago. And when that update, you saw that there was seemingly a stabilization in their numbers. And I think there's perhaps some encouragement, perhaps from current shareholders or maybe new shareholders looking to jump in that they do have a few levers, some disposals that they can make in order to support their balance sheet. I think that's really where the issue lies, because obviously there's always a risk when you've got big debt that you might run into problems. So I think encouraging update, but it's still very early days and perhaps a long way to go. It's not one that I personally hold or look at. I think I'll need to see a bit more evidence of stabilization before I can make a call on that one.
Yeah. It seems like this investor has been in the stock for a while and they actually got hurt along the way, but now things have come back and they are in profit. They do say that they don't prefer to hold the stock. Tammy, do you think that the prospects maybe look so good that the investor should stay in the stock? Or if it's, what do you say, once bitten, twice shy?
Yeah, I think they must take their money off the table at this stage. There's no evidence that shows there's going to be a material change in the business model. Yes, revenues are up and there's been a huge swing around the profits and so forth, but it's about sustainable growth. Will they be able to do this over the long term? Now, I have not seen evidence that they're able to do that. And when they provide that evidence, the market will respond. At this point, if you're in the money, take your money off the table. There are other opportunities in the market.
All right. Well, gents, I am going to ask one of you because we are running out of time. There's a question on Avenge. I've been following Avenge for a while now, and I'd like to hear your thoughts about it. The market cap is lower than their NAV. They have no debt. McConnell Dowell is out of SA, which to me is a positive. Moormans isn't affected by commodity prices as they are a contract mining company. They just get paid to dig the holes in the ground. To me, the turnaround story seems to be coming on a track. Worth a buy. So I'll give that to one of you. Who will it be? Say aye.
I'll take that as a former shareholder of Avenge. I think, look, fundamentally companies like Avenge are built on their book. So are you able to show evidence of future revenues going forward? It's great that you don't have debt. It's great that the turnaround story has happened. But can you show that the company over the next medium term, 18 months, 2 years, 5 years, has the ability to secure a book and service, especially in the industrial and construction sector? Right. And they haven't shown that evidence. And until you are able to display that, especially given the alternatives in the industry you're in, it makes it very tough to say it is a buy.
All right. Well, gents, let us get to your stock picks. Sanelisiwe, what are you choosing today?
So today I'm going to keep it local and go with Robex. So obviously it's a construction company focused mainly on roads, but they do have other stuff in there. I think with the recent new government, there's potential now for stabilization in government policy. Obviously, Sanral is a meaningful client for them, so they do get tenders out of there. So I think there's been a big focus out of Sanral to obviously refocus on fixing our roads. And I think Robex stands in good stead to focus, to benefit rather from kind of the potentially infrastructure revival in the country. I mean, there's a few other companies in this kind of mid and small cap range that might benefit as well. But today, I think I'll go for Robex. I think that's a good one.
All right. What do you think is good on your radar, Tammy, today?
Also local, also in the same industry, WBHO. I think they've got a good book. They've got some good flagship projects. They are diversified, especially into the renewable energy sector. So I think going forward, they've also been proven to be a great operator. So I think they're going to do well going forward. The Minister of Public Works and Industry and Infrastructure has made it clear that they're looking to turn South Africa into a construction site. So I think companies like WBHO will benefit from such going forward.
All right. All right. Well, thank you so much for your time and for your analysis today, gents. Much, much appreciated. That is all for tonight's Stock Watch. Thanks to our guest, Thamsanqa Netha from Shiloh Capital and Sanelisiwe Tofile from All Weather Capital. Up next, the close. Stay tuned.